the tech trade has been the trade to be in. Eddie Gabor joins us now. Eddie, good to see you. Look, you have been a bear for over a year now, I believe. Eddie, are you still a bear? And at what point will you start buying again?
You are right. We've been bearish for a year and a half now, and we are still bearish because we think we're going to be heading into a pretty tough time period here in the summer. And we'll start buying more than likely late summer, early fall. But what we have ahead of us here is once we get through this debt ceiling, the Treasury now has to replenish all this money that Yellen has spent. So for the first time all year, we're going to have the Fed doing QT, as well as Yellen doing QT, because she's now run out of bullets in regards to putting stimulus into the economy indirectly. So I believe this liquidity coming out could potentially cause some pretty sizable headwinds. And look, there's lots of sectors that are still down year to date. There's going to be a lot of opportunities to choose from.
What are they?
When we start buying.
What will you buy?
Well, the first area we've talked to clients from the start of this thing is small caps. I think there's going to be a lot of area. The Russell 2000 just continues to show weakness. I think there'll be great upside there. Energy stocks as well, too. Financials that have been completely beaten up. There's going to be lots of opportunity there, as well as real estate. Now, real estate, especially on the commercial side, will probably be a little bit later. And then, like I say, the retail names. There's so many retail names that are going to continue to get beat up as we go through this second quarter and earnings. So there's going to be plenty to choose from. I know right now technology obviously is the place to be, but it's a very highly concentrated market right now. You have a handful of names holding this market up. And if one of those names happens to show weakness, that's not where you want to be. You need to see more sectors participating before you can truly say it's a bull market, in our opinion.
To underline that point, if you look at the S&P 500, Eddie, it's dependent on 10 of its largest members, and they're up 44% this year. Having said that, by sitting out the market, Eddie, you missed the NASDAQ's 24% rally this year. The NASDAQ 100, think tech, it's 31% rally this year, and the broader market, even though it's narrowly concentrated, is up 9.5%. You missed that, Eddie.
Absolutely. And look, if our timing of getting out was poor, it would have really hurt our client portfolios. But how we measure our strategy is where are our clients' net worth from the peak of 2021? We can talk about year to date all we want, but the reality is we're managing their net worth. And what I would like to know is where investors are, even with this rally, from their peak of 2021. Because at the end of the day, that is more important than a year-to-date return. Now, would I have liked to participated in some of that for our clients? Of course I would. And for Keith Fitzgerald and some of those folks that made that call early, my hat's off to them. I think they did an awesome job. We missed the year-to-date so far, but from the cycle highs, our clients are in a pretty good spot.
An honest man. Eddie Gabor, thank you very much.